Level 1, the anomaly. You are a senior financial analyst. 4 years at the company. Good reviews. Trusted. Nobody questions your access. It starts with a number. Not a large number. A small one. $340,000 sitting in a vendor account that doesn't match any purchase order in the system. You flag it internally. Assume it's a reconciliation error. These happen. You move on. 3 weeks later, you are running a routine audit of Q3 accruals. The number appears again. Different account, same structure. You open the original vendor file. The vendor exists. Has a registration number, a website, an address. You search the address. It is a UPS store in Delaware. You sit with that for a moment. You don't tell anyone yet. You open a new spreadsheet. You start from the beginning. Level 2, the pattern. You spend 11 days working after hours. No one knows what you are doing. What you find: 18 months of transactions, 31 vendors, all registered in Delaware or Nevada, all with addresses that are mail forwarding services, all approved by the same 2 people in the finance department. Total value, $4.2 million. The pattern is not random. Each transaction is just below the approval threshold that requires a second signature. $49,800, $49,500, $49,700, always just under $50,000. Someone designed this, deliberately, carefully. Over 18 months, you print nothing. You save nothing to the company server. You write the summary in a personal notebook because you have now noticed something else. One of the 2 approvers is your direct manager. Level 3, the decision. You have 3 options. Go to your manager directly. If he is involved, you have just ended your career and possibly your freedom. Go to HR. HR reports to the CFO. You don't yet know how far this goes. Go to the audit committee directly, bypassing every layer of management between you and the board. You spend 4 days making this decision. Not because you are afraid, because you understand that the wrong move destroys the investigation before it begins. On the 5th day, you send 1 email to the chair of the audit committee, not through company email, through a personal account, from a coffee shop 3 blocks away. 6 words in the subject line: I need to speak with you privately. Level 4, the investigation. The audit committee chair responds within 4 hours. 2 days later, you are in a conference room with 3 people you have never met: external legal counsel, a forensic accountant, the audit committee chair. You present everything: the vendors, the transactions, the approval pattern, the threshold structuring. The forensic accountant asks you 40 minutes of questions. Precise, technical, uncomfortable. At the end, she closes her notebook. You found the entry point. There is almost certainly more. The investigation begins that afternoon. You are asked to continue working normally. Tell no one. Change nothing in your behavior. You walk back to your desk, sit down, open your laptop, and act like nothing has happened. That is the hardest thing you have ever done. Level 5, the exposure. 6 weeks later, the forensic team has completed its preliminary findings. The number is no longer $4.2 million. It is $23.7 million across 44 shell vendors over 3 years, involving 4 employees, your manager, his direct report, the VP of procurement, and one name you did not expect: the CFO, not as a designer of the scheme, as someone who saw irregularities in internal reports 14 months ago and chose not to investigate further. Willful blindness. Legally significant. Potentially criminal. The board convenes an emergency session. Outside counsel takes over completely. The SEC is notified. 4 people are placed on administrative leave on the same Tuesday morning. Security escorts them from the building before 9 a.m. You watch it happen from your desk, saying nothing. Level 6, the cost. The investigation becomes public 6 days later. A single press release, carefully worded. Irregularities identified through internal controls. The stock drops 18% in 1 session. Your name is not in the release. It will not appear in any public document. But inside the company, people begin to understand what happened. Some colleagues stop speaking to you, not because they support the fraud, because you disrupted something, because you made a choice that affected 4 families, that affected shareholders, that affected the company's reputation in ways that will take years to repair. One colleague tells you directly, "You could have just let it go." You don't respond, because you understand something she doesn't. Letting it go was never actually an option. Not for you. Level 7, the after. 8 months later. 3 of the 4 individuals have entered plea agreements. The CFO is under separate investigation. Civil litigation is ongoing. You are still at the company. New CFO, new VP of procurement. New internal controls framework that you helped design. Your title has changed. Director of Internal Audit. The audit committee chair recommended the promotion personally. You sit at a different desk now. Corner office, window. One morning, a junior analyst knocks on your door. She has a spreadsheet open on her laptop. She looks uncomfortable. "I found something," she says, "in the vendor accounts. It's probably nothing, but it doesn't reconcile." You look at the number she's found. You recognize the structure immediately. You close your door. You sit down across from her, and you say, "Walk me through everything you found. From the beginning, leave nothing out." Because this is also the job. Not just finding it the first time, building the system that finds it every time.